What if the biggest myth in real estate is that you have to save 20% for a down payment? Seriously, imagine getting thousands, even tens of thousands of dollars for your first home that you might never have to pay back. This isn't some fantasy. It's a reality for a ton of first time buyers who know where to look. In this video, I'm pulling back the curtain on how to find this free money for your first home in 2026, using grants and forgivable loans from the state, your city, and maybe even your job. For so many people, the dream of owning a home feels like it's drifting further and further away. You see the headlines, you see the prices, and you look at your savings account and just think, how will I ever save up 50, 60, even $70,000 for a down payment? It's the single biggest wall for most people. But what if that wall is just a mirage? It's built on an old, outdated idea, and today we're going to tear it down. My name is Your Name, and as a realtor loan officer, I've helped hundreds of people figure out this confusing and, let's be honest, intimidating world of real estate. I've seen firsthand how the right information can totally change someone's life. It can take them from being a lifelong renter to a proud homeowner in just a few months. And the information we're covering today is some of the most powerful, game changing knowledge you can possibly have. We're going to break down what these free money programs are, how they work, the key differences between them, and most importantly, how you can find and qualify for them in 2026. The number of these programs has hit a record high, with governments dedicating more funds than ever to help people just like you buy a home. So, if you're serious about buying your first home in the next couple of years, this video is your official starting line. Get ready to take some notes because your path to home ownership starts right now. All right, before we start digging into this treasure chest, let's clear up a huge point. What does it actually mean to be a first-time home buyer? You need to listen to this because the term is way broader than it sounds, and you might qualify even if you're sure you don't. Most people think it means you've literally never owned a home, ever. While that's true for many, the official definition used for most of these programs is much more generous. The U.S. Department of Housing and Urban Development, CHUD, and most agencies that follow its lead, defines a first-time homebuyer as someone who hasn't owned their main home in the last 3 years. Let me say that again because it's a game changer. If you owned a house 4, 5, or 10 years ago, but sold it and have been renting for the last 3 years, you are very likely considered a first-time home buyer again. This reopens the door for a huge group of people. Folks who went through a divorce and had to sell, people who moved for a job and rented for a few years, or anyone who just decided home ownership wasn't for them back then, but is ready now. Think about it. Did you own a condo in your 20s, sell it, and now you're renting with your family? You're probably a first-time home buyer again. Did you and an ex own a house that was sold 5 years ago in a divorce? You're probably a first-time home buyer again. There are even other special cases. Sometimes a displaced homemaker who only owned a home with a spouse can qualify. Some programs also make exceptions for people who owned something that wasn't on a permanent foundation, like a mobile home. Why does this matter so much? Because a recent report found that over 1,400 assistance programs are specifically for first-time homebuyers. By understanding this broader definition, you might have just unlocked access to hundreds of opportunities you thought were off limits. So as we go through this, don't count yourself out. If your name hasn't been on the deed of your primary home in the last 36 months, you need to be leaning in. These programs are designed for you. Let's start with the holy grail of home buying help: grants. The word itself just feels good, right? A grant is simply a gift. It's money for your home that you never ever have to pay back. No secret repayment schedule, no hidden interest. It's a straight up gift to help you close the gap between your savings and what you need to buy a home. So where does this magical money come from? It's not a lottery. These funds are usually offered by state and local housing finance agencies, city and county governments, and nonprofits. Their goal is simple: create stable communities, encourage home ownership, and help families build wealth. They see homeownership as a public good, and these grants are their investment. So, how much are we talking about? It varies a lot by program and location. It might be a flat amount, like $5,000 or $10,000, or more often, it's a percentage of the home's price, usually between 2% and 5%. Let's put some real numbers on this. Imagine you want to buy a $350,000 home. A grant program that offers 3% of the price would give you $10,500 in cash that you never have to repay. For some loans, like an FHA loan that only requires 3.5% down, that grant could cover almost your entire down payment. For instance, the Bank of America Down Payment Grant Program offers 3% of the purchase price up to $10,000 as a true grant that doesn't need to be paid back. This is life-changing money. It can take your timeline from maybe in 5 years to let's start looking next month. Of course, you don't just raise your hand and get a check. There are requirements. This is the catch, if you want to call it that, but it's really just a set of qualifications to make sure the money goes where it's intended. First, income limits. This is a big one. These programs are almost always for low to moderate income households based on the area median income, AMI, in your specific county. You might need to earn 80% or less of the AMI, though some programs in pricier areas go up to 120% or more. You have to look this up. Second, purchase price limits. The program will have a max home price you can buy, ensuring the funds are used for modest homes, not mansions. Third, you usually have to be a first-time home buyer, using that 3-year rule we just talked about. Fourth, it has to be your primary residence. These programs are for homeowners, not for funding your career as a real estate investor or buying a vacation spot. You have to live there. And fifth, homebuyer education is often mandatory. You might have to take an 8-hour course. Don't groan. This is actually amazing. These courses teach you about budgeting, the home buying process, closing costs, and what to expect. Honestly, every homebuyer should take one. Let's use an example. Sarah is a teacher in Houston who makes $65,000 a year. She wants a $220,000 condo. She finds a city grant offering 4% of the purchase price to buyers earning less than 80% of the local AMI. Her salary fits, the condo price fits, and she's a first-time buyer. She takes the required online course. At closing, she gets a grant for $8,800. That's hers, free and clear. It covers her entire 3.5% FHA down payment of $7,700 with over $1,000 left for closing costs. Without that grant, she'd be saving for another 2 years. With it, she's a homeowner. That's the power of a grant. It's not a gimmick. It's a funded strategy to make homeownership happen for more people. Okay, we've talked about grants, pure gift money. Now let's get into the next best thing, which is just as powerful, but comes with one important condition: forgivable loans. You might hear them called silent seconds or deferred second mortgages, and they're a massive opportunity. So, what is a forgivable loan? It's a loan you get for your down payment, but here's the magic trick. You don't have to pay it back as long as you live in the home for a certain number of years. Think of it like a deal. The housing agency says, here's a chunk of money to help you buy a home. In return, just live in it and be part of the community for a while. If you hold up your end of the bargain, the loan is forgiven. It vanishes. If you sell, move, or refinance before the time is up, you typically have to pay it back. How long? It varies. 5 years is very common. Some might be 3, while others offering huge amounts could be 10 or 15 years. Sometimes the loan is forgiven all at once at the end, but more often it's forgiven gradually. For example, on a 5-year loan, 20% might be forgiven each year. Move after 3 years and you'd only owe back the remaining 40%. After 5 years, you owe nothing. This is a win-win. The housing agency gets stable, long-term homeowners, and you get money that turns into a grant over time. The amounts with forgivable loans can be even bigger than grants. In some high-cost areas, these loans can be life-altering. For example, New York City's Home First program can offer qualified buyers up to $100,000. A program in Volusia County, Florida offers up to $50,000 as a 0% interest, 15-year forgivable loan. Let's walk through it. Meet Mark and Jessica, looking for a home near Philadelphia with a household income of $110,000. They're eyeing houses around $400,000. Saving over $30,000 for a down payment and closing costs feels impossible. Their loan officer tells them about a real Pennsylvania program called KFIT, which stands for Keystone Forgivable in 10 Years Loan. It offers 5% of the purchase price as a 0% interest loan, forgiven over 10 years. For a $400,000 home, that's $20,000. Mark and Jessica plan to stay and raise their family there, so it's perfect. They get $20,000 at closing, covering their whole down payment. They just need to cover closing costs. For 10 years, as long as they live in the house, that $20,000 debt shrinks until it disappears. They got a $20,000 gift just for promising to be stable members of their community. The only real trade-off is that residency requirement. You have to be honest with yourself. If your job might transfer you in 2 years, a 10-year loan isn't for you because you'll have to pay it back if you sell early. But if you're looking to put down roots, a forgivable loan is an incredible tool. The condition is one you were probably planning to meet anyway. We've hit the big government programs. Now let's talk about a category that's a true hidden gem: employer-assisted housing, or EAH. What if your job was the key to your first home? It's a real thing. A growing number of employers are offering down payment assistance as a benefit to attract and keep good employees, especially where the cost of living is high. It helps them build a more loyal, stable workforce. These programs look a lot like the ones we've discussed, either outright grants or forgivable loans. An employer might offer a $5,000 grant after 2 years of service, or a $15,000 loan that's forgiven over 5 years of continued employment. A huge plus is that EAH programs often have fewer rules than government ones. Many don't have income limits. The main requirement is just being an employee in good standing. So, who offers these? It's not just tech giants. The most common are institutions rooted in their communities, like universities, hospitals, and city governments. Universities want faculty and staff living nearby. Hospitals need nurses and doctors close by for on call shifts. And cities often offer these perks to firefighters, police, and teachers so they can afford to live in the communities they serve. For instance, the federal Good Neighbor Next Door program isn't a grant, but it offers eligible law enforcement officers, teachers, pre-K through 12th grade, firefighters, and EMTs a chance to buy a HUD-owned home in a revitalization area for a 50% discount on the list price. It's an incredible deal, but it's specific to certain homes and professions. Many states have their own versions too, like the Homes for Texas Heroes program, which provides down payment help for teachers, police, firefighters, and veterans across Texas. But how do you find out if your company has a program? Check your benefits portal. Look on your internal HR site for terms like homeownership, down payment, or housing assistance. Talk to HR. Just ask, schedule a chat with an HR rep and ask if the company offers any kind of housing assistance. If enough people ask, they might even start a program. Ask around. Talk to coworkers who recently bought a home. Did they get any help from the company? Don't leave this stone unturned. A simple question to your HR department could be worth thousands of dollars. Section 4. How to find these programs in 2026. Okay, we know the money is real. There are thousands of programs out there. So, how do you actually find them? It can feel like looking for a needle in a haystack, but here's your step-by-step action plan. Step 1. Start at the state level. Your first stop should be your state's Housing Finance Agency, HFA. Every state has one. Just search for your state's name Housing Finance Agency. For example, California Housing Finance Agency, CalHFA, or Texas Department of Housing and Community Affairs, TDHCA. On their website, look for a homebuyers or loan programs link. This is where you'll find all their statewide down payment and closing cost assistance programs. The sites are a goldmine of PDFs, income limit tables, and lists of lenders who work with their programs. You have to start here. Step 2, drill down to the local level. Next, get local. Many cities and counties have their own separate programs that you can often stack on top of state aid. This is where the help can get really generous. Your search is similar. Your city name down payment assistance or your county name housing authority. You'll find programs focused on local residents. Don't assume your town is too small. Local governments use these programs to stabilize neighborhoods and encourage people to put down roots. Step 3, use national search tools. While primary sources are best, a few national websites do the work of collecting all this info for you. The number one site you need to bookmark is downpaymentresource.com. They have a searchable database of over 2,500 homeownership programs across the country. You can enter your income, location, and profession, and it will spit out a list of programs you might qualify for. It's an incredible tool. Another key resource is the HUD website, where you can find lists of local programs and, importantly, HUD-approved housing counseling agencies. Step 4, talk to the experts. Research is vital, but don't go it alone. The final, most important step is to talk to the right people. First, a HUD-approved housing counselor. They are nonprofit experts who can give you unbiased advice and walk you through your local options for free. Second, and this is non-negotiable, you must work with a lender who is an expert in down payment assistance, DPA. When you call lenders, one of your first questions must be, which state and local down payment assistance programs are you approved to work with? Don't be shocked if some say they don't bother. That's a giant red flag. You want a loan officer who is genuinely enthusiastic and knowledgeable about DPA. A great DPA savvy lender is worth their weight in gold. They are the ones who actually get the money to your closing table. Finding the right lender is just as important as finding the right program. Call to action. We've covered a ton of ground. We busted the 20% down myth, explored grants, forgivable loans, and employer help. You now have a map to potentially tens of thousands of dollars for your first home. But I know it can be overwhelming. When you start talking to lenders, you need to be in control of the conversation. You need to sound like you know what you're talking about, because now you do. To help with that, I've created a free PDF for you, the DPA Power Questions Checklist. This checklist has the exact questions you need to ask any mortgage lender before you agree to work with them. It includes questions like, which specific state, county, and city DPA programs are you approved for? What's your process for reserving DPA funds, and what's the typical timeline? Can you show me how a loan with DPA compares to one without it, including interest rates and fees? Can we stack a state level program with a local grant? This checklist will instantly show lenders you're a serious, educated buyer and help you spot the true experts. To get this free checklist right now, click the link in the description below. It's my gift to you to help turn this knowledge into action. And while you're down there, if this video has been valuable, please hit that like button and subscribe. It helps us reach more future homeowners just like you. The journey to buying a house can feel like a huge climb, and for years, the down payment has been the biggest boulder in the path. It's stopped so many people, making them feel like home ownership is a club they just can't get into. But today we've shown you that the path is different than you thought. There are ropes and ladders waiting to help you up that climb. There are grants that give you free money. There are forgivable loans that reward you for just putting down roots. And there are even programs that can turn your job into a partner in your dream. For 2026, the landscape is packed with opportunity. With the number of assistance programs at a record high, there has rarely been a better time to be an informed first-time buyer. The money is real, it's available, and it's waiting for people willing to do a little homework. The dream of holding the keys to your own front door doesn't have to be something you just hope for someday. By using the strategies we've talked about, by finding the programs, understanding the rules, and asking the right questions, you can turn that dream into your 2026 reality. Home ownership is within your reach, and your journey starts now.